Hi there and welcome to ET Now. I'm Ashwin Mohan and you're watching our budget special, The Tax Effect, where we are dissecting some of the key pre-budget expectations from Arun Jaitley and his A-team. On this week's episode, we're going to dissect some of the key expectations on the international tax front. And to throw more light on that, we have two experts from the world of international tax. I have with me Rajesh Simhan from Nishit Desai Associates and Gautam Mehra from PwC. Rajesh as well as Gautam, thank you so much for taking out time and joining me on the show.
Thank you.
Gautam, let's kickstart with you. Before we move on to some of the nitty-gritties of what corporates and MNCs are expecting in terms of clarity on the international tax front, let's deal with the legacy issue. And that legacy issue is the unresolved retrospective case of Vodafone. As we all are aware, it's currently embroiled in the midst of arbitration. Do you think perhaps this budget, like perhaps the previous budgets, offers yet another opportunity for the finance minister to put an end to the ghost of Vodafone once and for all? Or do you think the government would be tempted to play it safe and wait for arbitration and its outcome?
Yeah, honestly, I think if I have to be candid, I think that moment has gone. The finance minister in this first budget did mention that going forward they will not make retrospective amendments. But in the same breath, if in that budget they had also revoked or reversed what the earlier government had done, it would have had an entirely different impact. I think much water has fallen under the bridge, and for now, with international arbitration, probably commenced, it's a little late in the day to kind of go back and of course, the window is open, but I think it's a little too late.
Rajesh, the Vodafone case was a case which, gave India a bad name, so to say, and that's how the entire phrase tax terrorism came to rise. Gautam mentions the fact that perhaps too much water has flown under the bridge, and the government and Vodafone have both settled into arbitration mode. And arbitration at the end of the day is a long pending process. Nobody really knows. There's no definite timeline as yet, and it's at the discretion of the international bench. But having said that, he makes an interesting point that the government also has not come out with any fresh retrospective cases, and this is just a niggling, legacy issue. What's your take? Do you think the time has gone, and that now we have to expect an outcome only from the arbitration and not from any specific tax policy?
So I do agree with Gautam when he says that at least there is no expectation in terms of the government actually going ahead and making the change, not when the matter is actually sub judice before the arbitral tribunal. Of course, everyone would like that it sort of gets resolved because the overhang always continues to remain. And the moment you have a legislation that is there, yes, you have a committee which is there to sort of scrutinize as far as retrospective cases are concerned. But I think the challenge for everyone will always be that what happens if the arbitral tribunal decides against Vodafone? Will there be another slew of cases which sort of comes into place? So I think the overhang is going to continue. But having said that, I don't think the government is going to look at taking any steps, at least as far as the past is concerned. And as Gautam said, the water has actually flown under the bridge on that. So it's very tough to see the government making a change on that front.
Do you think, Gautam, MNCs and corporates talk about the unresolved Vodafone case as much as it was a buzzword a few years back?
Only in terms of when they are in the process of restructuring or doing transfers. Certainly, this is an aspect very much kept in mind. But I think I'm not heard so much of people talking about that because that's past the history. It's done. Right now, everybody wants to look ahead and say, all right, let's going forward. What do we need to do?
And the finance minister has also made its resolve very clear that there won't be any repeat of such retrospectivity
in his first budget itself.
So at least that confidence is there in the investor community. All right, now let's move on from the legacy issues to a few other issues. Let's move on to GAAR, General Anti-Avoidance Rules. India is a late entrant to the GAAR club. When GAAR was first introduced, it spooked the entire markets, Rajesh. We're all aware of it, the kind of nervousness that existed in the markets. If you look at the situation right now, GAAR is in force. How do you look at the GAAR legislature or the GAAR literature that is out there in terms of deciding who falls under the GAAR ambit and who doesn't? What is the initial response? Because I know this is a new animal that you and your clients are dealing with.
So I think a couple of things. One is that definitely the mindset of whether of corporates or of international clients has changed a bit. In terms of, it's not just the GAAR, right? You have the BEPS project, you have multiple different things which are going on around the world. So I think definitely the approach has changed. People are sort of circumspect in terms of any kind of planning is concerned. The challenge, of course, which everyone has today is that there are no precedents. There are no clear-cut guidelines, so to say, in terms of how are you actually going to interpret each of the limbs of the general anti-avoidance rules. So I think that's where really the challenge is, and to a certain extent, I think what people are sort of looking at is to see, okay, how does the government or the CBDT sort of approach the provision. At least the one good bit that you have is that one of the things which had always been pointed out was that, is the tax department going to go all out and start issuing notices left, right and center?
That
doesn't seem to have happened. So at least to that extent, you know, there is some degree of comfort, though as I said, people are still sort of circumspect when it comes to any kind of planning because of the lack of what I would call clear-cut guidance, which will take time for it to come through in terms of what is permissible and what is probably comes within a black or a gray area sort of thing. So that's really what we are seeing.
Gautam, he raised something interesting, that as of now there's not been any flurry of GAR notices. So at least to that extent, you know, there's no heightened level of nervousness. But at the end of the day, we must acknowledge the fact that it is indeed at the end of the day an aggressive tool that can be used by, you know, the tax department. What's your take on the existing criteria based on which the taxman decides whether or not a particular transaction, especially international taxation, especially in international transactions, since we are dealing with international taxation in the show, how do you look at the approach as of now, and what's the feedback from clients? Do you think this budget perhaps has a window for Mr. Jaitley to address this, or do you think the CBDT will address GAR issues with circulars and clarifications outside the budget?
Yeah, no, I think it's a very valid point, because one of the key concerns around GAR is the subjectivity. So the good part is the government has put in checks and balances. It just can't be, you know, issued, a notice can't be issued by any officer. There are internal approvals to be done. Interesting, you said India is a bit late in the day. Actually, in 2014, I think we were one of the first ones to announce it, and the world took a, you know, if I'll say cue from it. The OECD project, everything started much, you know, after that. But on this point of uncertainty, very interesting, because I was at an international tax conference, and one of the revenue officers was there. I was moderating a panel, and exactly this question was posed to him, that why is it so subjective, right? People need certainty. And I think one of the responses which came through is, you know, the moment you have a very tick-the-box approach, then there are creative minds sitting who go and tick the box and find a way around it. So one understands that, and it needs to be principle-based, you know, so that people understand the principles on which it is to be followed. But I think a balance could be in terms of keeping it principle-based, but giving a set of illustrative, you know, the Shom committee, I think, did a great job by putting illustrations.
Absolutely.
Of saying this works, this will not work.
Illustrations.
Right? So keep it principle-based, but some guidance in that, I think, would be great.
You know, on a lighter vein, you know, you spoke about creativity. The tax department would like to believe that the advisory world is more creative than them.
Well, you know, we would like to work with the government and help them achieve the objectives, because transparency across the world today is where the world is going.
Sure. You want to quickly add to what Gautam was saying?
So I think apart from the illustrations, I think safe harbors to sort of clearly say that, listen, if you're taking certain kinds of arbitrage, that's something that we are going to look at it, and sort of say that, okay, once you have a set of safe harbors, then at least you know that, well, there are a set of transactions which you're going to be fine with. Illustrations definitely sort of help. Guidance notes sort of help. And that's something which, if you look at most jurisdictions, they do have built that over a period of time.
Anything in the budget specifically that you expect?
I don't think it will be part of the budget. I think it will be outside of it in terms of the CBDT, so hopefully coming out with something around it.
All right. So now we have dealt with retrospective tax cases. We have dealt with GAR. You know, I want to quickly, address one more aspect, which is indirect transfers. It's also related to the Vodafone tax case. Now, we've had rulings from high courts on what's the trigger for an indirect transfer of an Indian asset. Any scope of there being any expectation from the FM on terms of indirect transfer guidelines, especially because they provide guidance to MNEs, to multinational enterprises when it comes to restructuring situations?
Yeah. So, you know, this law has evolved quite a bit. If you see, when it first came out to now, the government has worked and brought out amendments. So for example, dividends on overseas shares were earlier taxable, and the government realized that that's not the intent and they made it exempt. Then there were cases of saying, look, if you're just upstreaming profits from sale of Indian shares, we've already paid tax. Those should not be taxed when they're upstreamed again, right? A window was created, exemption was created, but only for certain set of investors. Initially FPI Cat 1-2, and then some AIF funds Cat 1-2. The rest of the investor community, category 3 FPI funds, and as well as strategic investors, they were not entitled, or they're still not entitled to this exemption. I think that's one area where, you know, certainty can be brought in to say
in the budget.
Well, why not? That would require an amendment to the Act, and that can be brought in. The other piece is, if you just go on the basis of change of economic ownership should result in taxation under indirect transfers, right? And therefore, where large multinationals are looking at restructuring the operations, and there are mergers, demergers happening overseas, the law does provide for exemptions from tax from these foreign mergers, demergers. I think one of the provisions is not absolutely clear whether the exemption applies to the company and the shareholders.
Right.
So I know some industry bodies have made representations. So something like that will help, especially in the light of, you know, the changed treaty position. People are looking at saying, I don't need so many entities. Let me get to a simple structure. But an uncertainty in the law will stop them from getting to a more cleaner, simpler structure.
All right. Now let's move on to litigation. And, you know, that's something that the government time and again has spoken about, saying that they want to avoid frivolous litigation. We have seen several strong instances of the government, in certain cases, not even filing an SLP. You know which cases I'm referring to. If you look at international taxation and this budget from a litigation perspective, there was a point of time when transfer pricing, you know, cases were all over the department, and, you know, advisors like you were really busy. The judiciary was also clogged. That has dipped, but still there is substantial transfer pricing litigation. And transfer pricing forms an important part of international taxation, and there seems to be a slight trust deficit, at least. Now, I know we've had the, you know, the APA, the advanced pricing agreements. There's been a lot of considerable progress on that front. There have been safe harbor rules, as Rajesh you were referring to. But what more can the FM do in this budget to reduce litigation specifically with relation to transfer pricing?
So I think there are 2 or 3 aspects, right? Because today your mechanism which is there in terms of having specialized bodies to actually look at it, because the fact is that especially when it comes to transfer pricing and looking at comparables, there is a lot of subjectivity which sort of comes in, because you have a taxpayer and tax authority who are probably at at 2 ends of a spectrum which is there. So trying to probably see whether there can be any kind of a negotiation or a mediation sort of mechanism, and that's something that we've seen in other jurisdictions, and it seems to have worked effectively. I know examples in Mexico and a few other emerging markets which have used that as a mechanism for trying to resolve disputes without actually going into absolute litigation. I think that's something which the government should actually look at, because purely it's not really good when you sort of go out and say that, listen, out of all the transfer pricing disputes in the world, India has more than half of them, right? Because that's really the state that you are in. So I think, and the second aspect around it is that with each case you're seeing that some movement that's happening in terms of, in 1 year it is a cost plus 15%, in the next year somebody wants to push it up by 1%, another percent. So that sort of keeps, it sort of rolls, it's a revolving sort of door where the litigation just sort of keeps increasing. So I think that's two areas which the government should seriously sort of look at, to sort of ensure that there is some degree of continuity as far as saying that once we've sort of fixed it at a certain limit, let's just continue with that, and also trying to see whether they can get in some kind of mediation mechanism to actually resolve disputes before they get into litigation on transfer pricing.
Right. All right. Those are points from Rajesh. Gautam, I quickly want to get your point on this aspect before we move into a short break. What can the government do in this budget? What can Mr. Jaitley and his team do to address this TP litigation aspect?
Yeah, so firstly, I think the AP, as you mentioned, has been a tremendous success. 180 odd, agreements signed. You just take on an average, 5 years, and you take 20-25 crores every year. You're talking about 25,000 crores of disputes put away, right? That's a great achievement. Right structure, right people over there, and it's worked very well. What more, if you look, in parallel, the DRP mechanism, dispute resolution panel mechanism, which is there, it's not really met the full objectives that were there, and I think there's a need to probably relook at that structure of how that body is constituted, whether it needs to be a little more independent rather than only having officers from the department. So that's one aspect. The second aspect is, looking internationally. So transfer pricing typically follows business models. And there's a new concept coming up saying, should we just audit 1 year at a time? Or to make it more rational and reasonable, because businesses follow cycles, should we have a 3-year transfer pricing audit as a block, right? So you're able to see the ups and downs of business and therefore take a more rational and reasoned view.
Right.
So that's one international developing concept which could be introduced. And I think the last is a more fundamental point of there has to be onus and accountability at both ends. So certainly taxpayer has to be responsible for whatever he's paying or receiving and proving that that's right. But at the same time, well, the government has done a few steps to, kind of check high-pitched assessments, right? Some level of check and accountability on that as well. So I think a mixture of these 2 or 3 things will really get across, and of course, the AR. Just replicating what the AP has done in the Advanced Authority for Rulings as well, because there you could have international companies coming in, making applications, getting certainty up front.
Absolutely. So lots of key expectations over there. Gautam as well as Rajesh, hold on to your thoughts. It's time now to slip into a short break. Stay tuned to ET Now and keep watching our budget special, The Tax Effect, which is focusing on international tax expectations. We'll meet you on the other side of this short commercial break. Welcome back to Budget 2018, The Tax Effect, where we're dissecting some of the key expectations from the budget on the international tax front. And joining me is Rajesh Simhan as well as Gautam Mehra. Rajesh, let's look at the entire royalty aspect. There's a lot of litigation around royalty as well. This government always speaks about adopting best international practices. In the budget, do you see any scope of perhaps there being any tinkering to the existing regime around royalty outflow?
So I think you're going to have 2 or 3 things happening, and I do see that happening, because one is that especially when you look back to the last 2 years, it's not just royalty, right? So we've sort of now expanded it. We've got the equalization levy, which is there on certain kinds of digital services. So I do believe that I wouldn't be surprised, at least, if I see the government trying to expand the base. I mean, not necessarily the right approach, but we are seeing internationally that governments have been trying to increase the base to the extent possible. So I think you won't be surprised if we see something along the lines in respect of more types of digital services being captured or coming within the tax net. Having said that, I think what everyone needs to be cognizant of is, especially when we are talking about things like royalty or some of the new age services, so to say. What people need to be cognizant of is that you're trying to balance 2 different things. One is that you do want consumers to ensure that they have the ability to have access to these kind of services, and unduly taxing them is not necessarily the best way to go about it. And the second one is also what I would look at as tax competition, because you're getting into a world where different countries are sort of looking at reducing their overall tax rate. US is a good example. Many European countries have also started doing it. So you're getting into an era of tax competition as much as anything else, where countries are also trying to say that while we may increase the tax base, we are going to reduce the tax rate. So I do hope that the government is cognizant of it. So while they are looking at streams of income in relation to royalty or some of the new age tech services, that they try and balance the 2 around it.
Gautam, he referred to the equalization levy, the so-called Google tax, if I might call it that, and that was quite a bouncer. That was something new and novel, clearly taking a leaf out of overseas jurisdictions. We have seen a lot of changes in the international tax community. Take, for example, what the Trump administration has done, slashing the tax rate from 35 to as low as 21. When the world's largest economy does that, other emerging economies, especially ones that are expected to grow at a scorching rate like India, they are also expected to follow suit, or at least they're expected to strategize accordingly. And this has happened just, say, a month or so before the budget. What kind of an impact do you see on our international tax framework vis-a-vis what's happening in overseas jurisdictions? And like he mentioned, do you expect a few more services to come under, a few more digital services to come under the ambit of the equalization levy? Because let's face it, we are dealing with a ever-changing world, and how does the department and the government also keep pace with new business practices and new and emerging sectors?
Both very valid points. Let me take the equalization levy first. As you know, the OECD is trying to get countries together to adopt a common approach of how do you tax digital transactions. And since, things were going on slowly, India adopted what is called the unilateral approach of saying, I want to levy this tax, right? And that's fine. They'll probably spur countries into action and arriving at a consensus quickly. And there are divergent views of thoughts. The user economies like India want to levy a tax based on usage, right? Whereas there's other countries who want to levy tax based on the IP and all of that stuff. So I don't know where that will reach. But having said that, if progress is very slow on that, I wouldn't be surprised if India either expands horizontally, expanding the kind of services that come out of the net, or vertically taking the rate up, right? So that's maybe not necessarily this budget, but that would be the direction. Coming to the point of international taxation, certainly that I think would put pressure on us to say, how can we respond to that? US, like you said, at 21%, and they've had this toll tax, right? So all reserves sitting in India of US multinational subsidiaries, somebody back in the US will probably pay a tax on that. And therefore, there's no need for that capital, excess capital to sit over here because they've already paid taxes there. Now, if there's a push to push that money capital back to the US, I think something needs to be done to incentivize or motivate that capital to remain here and to attract fresh capital. So when you can talk of, increased levy of royalty or putting some curbs on that, that all has to be seen in the context of the wider scenario of what impact it's going to have on capital flows and investments. I think the government has done a great job on the regulatory side. So FIBB, and plus the very recent things about just liberalizing the whole model, comments by Mr. Modi at Davos were so, anti-protectionism and saying, come to India, right? So I think that the regulatory and tax framework has to kind of keep that in mind and follow that through. Otherwise, we will get less competitive compared to the others. And we are in a shining spot right now. We should make the most of it.
Rajesh, stretching your point, you spoke about competitiveness. He spoke about the risk of, a flight of capital. How can the FM address this particular aspect, avoiding a flight of capital from India to overseas in the international tax front? You speak to a lot of funds, MNCs, and the domestic investor community and the domestic corporates as well. What more protection do they want on the international tax framework, and is there scope for it in this year's budget?
So I think there are a couple of different points, right? Because even when you speak to anybody, no one is against payment of taxes. I think what people are always looking for is that there needs to be a stability around the taxes. It has to be commensurate and cannot be a very high rate. And you need to have certainty around positions. Those are really the three things which investors always look for when they are thinking about saying that, do I expand in a particular market, or do I take the capital and reinvest in another market, right? And take a simple thing. Today, when we talk about capital flows going out of India, you may have a situation where MNCs would want to say that, listen, I want to reduce my India exposures so that I don't trip the indirect transfer tax. I want to keep the value of India below 50%, so I rather take the capital and redeploy in another country. So I think when you're looking at preparing the budget, you obviously want to be cognizant of the fact that today it's become everyone's moving towards a single market, right? It's no longer a situation that people will say that I will have to necessarily come to India if I'm looking at outsourcing services. I have 15 other jurisdictions which are also competing with India in terms of attracting the same thing. So I think three aspects: stability, certainty, lower rate. People are not too worried about expansion of base as long as the other three limbs are there.
Well, I just realized it's ironic we're talking about a flight of capital, especially at a time when the stock market is hitting new highs with every passing day. But, gentlemen, it's time now for closing thoughts. I'll start with Gautam first. Gautam, your three top picks on the international tax front in the budget specifically. What do you expect, and what would you like to see being laid out?
Yeah, so I like to see on exactly the points that we discussed. So first is the clarity and some certainty on the indirect transfers. A little more, if I'll say, illustrative guidance around GAR, right? That would be good. And third is reduction of litigation.
What about you? That was Gautam's list. What are your top 3 picks on the international tax front from this year's budget?
So I think there are 3 areas to my mind. Our first one is on indirect transfer. As we look at deals and we are seeing the kind of permutations and combinations on deal framework, we are seeing anomalies arise as far as the application of indirect transfer provisions are concerned. I think the second area is around litigation, especially around probably functioning of the advanced ruling, trying to get rulings within 6 months, or trying to ensure that even litigations relating to international investors get resolved in a shorter period of time. And I think the third area is around digital transactions. Hope to see the rate of equalization levy come down. Not sure whether there will be an increase in the base, but at least want to see the rates come down.
All right. Rajesh as well as Gautam, always a pleasure chatting up with both of you. Thanks so much for taking out time and joining me on the show.
Sure. Thanks for having us here.
On that note, it's a wrap on this pre-budget special, The Tax Effect. This is Ashwin Mohan signing off. Stay tuned to ET Now for more news and updates.